Ladies and gentlemen, good morning and warm welcome to HansaMatrix Investor Webinar. Today we are hosted by the Chairman of the Management Board, Mr.Jānis, and Management Board Member, Finance Director, Mr.Māris Macijevskis. The presentation will be held in English. As always, we will start with company's presentation, which will be followed by questions and answers session. Therefore, you are kindly invited to participate by typing your question in the questions box, which can be found in the settings panel zone on the right side. Jāni, Māri, I invite you to start the presentation.
Hello, everyone. Thank you for joining for Q2 and 6-month result for the HansaMatrix. As usual, we will start with executive summary, and I will talk about the most applicable business trends we observe during this period of time. So, and those 3 points are: one, about the business segments we are working with. Of course, the most important point for us is how the COVID-19 impacts our business, and nevertheless, we must as well mention about the component shortages we faced during this year. So if we talk about the business segments, still we continue to see the strong demand on data networks, and mainly, of course, it is driven by the new trend of remote life in business work and soon as well in studies and schools. And we can be happy that actually this demand increase has compensated some other sectors where we see the slight decrease, like the industrial sector. When we talk about the COVID-19, of course, we see that there are some positive trends that situation has been improved globally, and for sure as well in our country. But I think we still must stay quite stressed in order to monitor the situation and rapidly respond to stick to the business targets we have settled to ourselves. If we talk about the component shortage, we observed that actually the component supply service has decreased from 90% to approximately 60%, and that has added approximately in average 30 to 40 weeks to the lead time. And if you are looking for the possible recovery of this crisis, then we expect that the mid-2022 the situation should be at least better and much more stable than it is today. If we move for the Q2 summary, so we can see that still we are doing good, thanks to those segments that are continuously growing, and our sales year on year we have 14%. And the same as in the Q1, EBITDA level is 1.1 million. That is slightly smaller than it was in Q1, and EBITDA margin is 19%. Q2 net profit has been decreased by 500,000, and it is mainly due to the provision for EIB warrant liabilities due to the increased price share. But we would like to as well mention that our Q2 normalized net profit is positive, is the 500,000. Overall, our revenue will be in 5.2 million, with I would say strong increase compared to year on year. Comparison with peers, so the HansaMatrix EBITDA margin, we can see that we are still on the top place regarding EBITDA margin. Nevertheless, the enterprise value that is in range between the 7-13, we are on 7.4, so on the lowest part of this result. More than details about the Q2 results will be presented by Māris Macijevskis. So, mic is yours, Māris.
Thank you, Jānis. Yeah, Māris Macijevskis here, CFO of the company. So in the second quarter of 2021, the revenue amounted to 6 million, which was a 14% year-on-year increase, and also increase of 4% as compared to the first quarter of 2021. In Q2 of 2021, three main regions to which manufacturing services were provided were Baltic states with 50% of total, Nordic countries with 26% of total, and outside the EU countries with 20% of total. Services provided to rest of EU countries this quarter were 4% of the total revenue. The revenue was significantly growing in Baltic states and Nordics this quarter on year-on-year basis due to a good client performance in data networks sector, while sales decreased in the rest of EU countries, explained by changes in demand for final products for some clients, with volumes expected to return starting with Q4 of this year. Next, revenue by market sector. In Q2 of 2021, two main revenue sectors were data networks with 58% of total and industrial sector with 27% of total. IoT, optics and photonics and other product sectors were each 4% of the total revenue. In second quarter of 2021, revenue in data networks and optics and photonics increased significantly, while industrial sector revenue this quarter contracted on a year-on-year basis. Sales increase in data networks is explained by strong demand in this sector due to increased remote connection for work and leisure necessities. Then going to profitability, EBITDA this quarter amounted to 1.15 million euro, increasing significantly by 118% on year-on-year basis, as the company revenue and profitability recovers from COVID-19 impact in the second quarter of 2020. Net loss amounted to 327,000 euro and is mostly explained by the EIB warrant liability fair value provisions due to increasing HansaMatrix share price. Second quarter normalized net profit amounts to 500,000 and EBITDA margin achieved amounts to 19%, and this high EBITDA profitability is determined by the increased proportion of higher value-added products in the manufacturing product mix in the reporting period. Then 6 months results in detail. In the first half of 2021, 13% year-on-year growth was achieved, with revenue reaching almost 12 million euro. The increase in revenue reflects the strong market demand. However, the global component deficit is limiting the growth, with 6 months revenue slightly smaller than second half of 2020 revenue volume. The next 6 months result split by regions. Leading region is Baltics with 54%, then followed with Nordic countries with 23% of the total. The rest of EU 5% and outside the EU countries 18%. Baltic state revenues were increasing significantly, but the rest of EU revenues decreased due to reasons as explained earlier, analyzing quarterly revenue trends. Then going further, 6 months revenue by market sector. Two main sales sectors are data networks and industrial products with 55 and 32% proportion of the total revenue. IoT, optics and other product sectors are smaller, generating 4 to 6% of the total revenue. In first half of 2021, revenue dynamics of key sectors on year-on-year basis include significant data network revenues increase, but industrial sectors revenues decreased. Going further to profitability in 6 months, EBITDA was 2.4 million, 147% up from 2020 6 months. Net loss result in this period was 280,000 euro, and company net profitability was mostly influenced by EIB warrant liability fair value provisions. And as you can see, the normalized profit is almost 1 million in 6 months. For trailing 12 months period, ending in second quarter of 2021, the revenue amounted to almost 24 million euro, and EBITDA reached 4.5 million euro, with EBITDA margin reaching almost 19%. And this quarter, the company actually reached a historically highest trailing 12 months EBITDA, which is explained by the increased proportion of higher value-added products in the manufactured product mix. And in the last 12 months, the company operated with small net loss of 15,000 euros. Next, regarding investments, this year the company mostly carries out equipment maintenance capex with 196,000 euro investment in second quarter of 2021 and 330,000 euro investment in a half year of 2021. HansaMatrix investment in LightSpace Technologies at the end of Q2 has not changed compared to the beginning of this year and amounts to 8.6 million euro. Investments in Zinātnes parks in Q2 and 6 months of 2021 were carried out only to maintain the property and amortize the bank loan, and as at the end of the second quarter of this year amounted to 2.4 million. Now I give floor back to Jānis to continue the presentation.
Yes, thank you, Maris. So we will talk a bit about the more attractive and challenging success of our subsidiary company, LightSpace Technologies. And I would say we have been much more successful than the Q1 because the COVID situation led us to talk with our potential customers much closer than before. And first and the most important achievement is that we were being accomplished 3 product validation projects with MedTech corporations with applications in surgical navigation and robotic surgeries. So they has been evaluating our image quality for the previous model IG1000, and probably few of you know that there was the targeted to release the IG2000, but because of the same problem in the supply chain, especially in optics, that decision has been postponed for 2022. But to move forward with the relationship with the MedTech corporation, there has been a new decision to evaluate to do the evolution of the product IG1000. So there will be another upgraded product IG1050. So mainly there will not be difference on the optics and the resolution of the picture, but considering all the inputs that the partners have been giving to us, so there will be plenty of improvements on ergonomics. In addition to that, so we were restarting to work with the European leading car brands, so to identify the business opportunities, and normally next quarter LightSpace will visit them for doing the demo roadshows. If we talk about the investment, so 1.7 million has been approved by EIC Fund as the blended financing contribution, and of course the LightSpace continue to work to attract the new investments. About the significant events in 2021 Q2, so as I mentioned, we have strictly work on improving the sales force. and actually it resulted to have a new contract. So we have new customer from Nordics, so who are working for the transportation industry, and we have received the potential business opportunity for 1.5 million annual, with potential to grow up to 2.5 millions. There has been some changes as well in the management. So me, myself, Jānis Sams, has been appointed to take the position of CEO of HansaMatrix. Therefore, Ilmārs Osman is quit this position, but he continued his operations in supervisory board of HansaMatrix and as the CEO of LightSpace Technologies. In addition to that, we have a newcomer in a supervisory board. This is Anders Linnerborg. So he will be as the independent member, mainly coming from electronic manufacturing. And Baiba Andrubesa now is the chairwoman of the HansaMatrix. So we highly appreciate her initiative to act as a chairwoman. Another point is that during this period we have been paying the dividends that amounted in 54 kilo euro, and to following the benchmark of best governance, we have choose the new auditing company, so Deloitte Audits, and they are selected for audit us for next 2 years. Significant events after reporting period. I can be proud to say that we are being glad to welcome another 2 purchase orders that actually are already confirmed, but due to the long-term lead times for the components, those purchase orders will be started to deliver to our customers starting beginning 2022. So one is 3.3 million PO for the human machine interface customer in Germany, and $1.4 million US for high complexity products what we are delivering outside the European Union. So normally we consider it as the upside for our revenue planned next year. So we can probably move to the questions and answers session. We have received few questions in advance. We will start with them.
Jānis and Māris, thank you for the presentation. Now let's proceed with questions received before the webinar. But before, a reminder to those who haven't yet submitted their questions that you can still do it in the questions section in the settings panel zone. So the first question received before: does company have pricing power? Can you pass cost pressures to clients?
Yes, so I will answer the question. So normally, of course, we have very long-term relationship with our customers, our key accounts. We are measuring between 10 and 15 years of cooperation, and now the global problem of component availability and the price, actually we consider it as the common issue we need to fix. So for sure we can cover some kind of cost pressure by doing the productivity, internal manufacturing productivity, but most of the cost pressure is forwarded to our customers. And in most of the cases, especially where you are contract-based relationships, this has been accepted. But to just provide some examples, so there are the components that cost sometimes even 50 times more than they cost 2 years ago, for example. So just to imagine what the effect it leaves on the final product cost. It's very challenging. Okay.
Thank you. Next question: what could be the biggest bottlenecks for the company for the next 24 months?
Normally, if we would continue to work smooth with the order intake we have planned, there would not be bottlenecks for coming 24 months. But due to the same material availability, we are accumulating the order backlog, and at some point when the situation will improve, our customers will expect to double or even triple deliveries. Therefore, we work closely together with our key accounts in order to anticipate and plan our capacity accordingly. So therefore, we have much more frequent meetings with our key accounts on every 2 weeks to see the situation and to follow closely the material availability. Yes.
Do you expect more standby periods for 2021?
Our decision is not to go for the standbys. So what we're gonna do is balancing the necessary resources versus confirmed customer demand, because normally we have increased our people resources by 60 to 80 people during last 9 months. So now there is time to balance it properly, to allocate them either for the industrial improvements or balance it more properly.
Thank you. And now questions received during the webinar. So the first one, the recent sales growth has been mostly driven by data networks in the Baltics. Does it mean mainly microticals orders?
As you saw, we talk about some 58 to 60% of our revenue, and there are of course this name is contributing at least half or even more of that, but we do have two other big key accounts that are contributing to this volume. So normally top 3 customers are working for this segment, therefore we cannot say that it's only microticals.
What is the current situation in the components market?
I think I already answered the question, but I can repeat. So the average lead time for the recent RFQ we received, it was 34 weeks. So it means if the customer would like to have his goods arrive, he needs to wait at least 34 weeks plus production lead time. But there are, of course, the components you need to wait now for even the year or even more.
Thank you. And the last question currently received, is the plan to start the production of EJ 2000 in 2022 still valid?
Yes, but it has been postponed for at least 1 quarter, as I mentioned before. And when I mentioned about the IG 1050, so normally the job is not stopped for any of those products. It's just probably the sequence will be following that IG 1050 will start the production a bit earlier than IG 2000.
Thank you.
Thank you.
All questions are now answered. A recording of the webinar will be, as always, available in the Nasdaq Baltic YouTube channel and in company's announcements. Gentlemen, thank you for the presentation and for all the answers given. Participants, thank you for joining. Until next time.
Thank you.
Thank you.